gentlemen, good day and welcome to Himadri Speciality Chemical Limited Q2 and H1 FY26 conference call hosted by MUFG in time. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Pooja Swami from MUFG in time. Thank you and over to you, ma'am.
Thank you, Shravani. Good evening, everyone, and welcome to the Q2 and H1 FY26 earnings conference call of Himadri Speciality Chemicals Limited. Today on the call, we have with us Mr. Anurag Chaudhary, CMD and CEO, Mr. Somesh Satnalika, EVP, Tire and Strategy, and Mr. Kamlesh Agarwal, CFO. Before we proceed with the call, I would like to give a disclaimer that this conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page 2 of the investor presentation of the company, which has been uploaded on the stock exchange and company website. With this, I now hand over the call to Mr. Anurag Chaudhary. Over to you, sir.
Thank you, Pooja. Good evening, everyone, and thank you for joining us today on Q2 FY26 earnings call of Himadri Speciality Chemical Limited. It's always a pleasure to connect with you all and share our progress. This quarter has been another milestone for Himadri, a period where our strategy, execution, and innovation have come together to deliver record results. I am pleased to share that in Q2 FY26, we have achieved our highest ever quarterly EBITDA and PAT, reflecting the strength and resilience of our business model. Our EBITDA stood at 243 crores, up 21% year-on-year, and PAT came at 187 crores, a 39% growth compared to last year. For the half year, we delivered 477 crores in EBITDA and 369 crores in PAT, both our highest ever levels. Strategic emphasis on high value, specialty and advanced materials drove a strong margin performance in this quarter, delivering quarter year-on-year improvement in both EBITDA and PAT. The impact of softer raw material prices was marginal, and with a large export order scheduled to recognition in Q3, we are poised for continued growth. Over the past few months, we have made steady progress across multiple initiatives, from advancing our pipeline of new product developments and pilot trials to executing capacity expansions, deepening global collaborations, and strengthening sustainability frameworks. At the heart of this progress lies our in-house R&D and technological capability. With continuous drive to innovation, integration, and value creation across business, we have continued to expand our international engagement, showcasing our capabilities at major global platforms. These events not only helped strengthen Himadri's brand visibility, but also deepened partnership with global leaders in specialty chemicals and new energy materials. We were proud to partner with Asia's premier cricket tournament as the official tire partner of Asia Cup 2025. Just as the champions on the field pushed boundaries and overcame every challenge, Birla Tyre continues to stand for performance, reliability, and an unwavering spirit on the road and in life. Through our campaign, Rolling with Champions, we celebrated the passion of the game, the unity of billions of fans, and our commitment to delivering strength and trust in every mile. This association marked a proud chapter in the brand journey. Before I move to other updates, I want to highlight an initiative that fully embodies our culture at Himadri, Bihan. This platform brings Himadrians from across levels and functions together to engage, learn, and exchange ideas in a collaborative environment. Vihan fosters a culture of continuous learning by facilitating meaningful interaction between young talents, passionate professionals, and senior leadership. Through this initiative, emerging talents gain exposure to real business challenges, receive valuable mentorship, and benefit from the collective vision of our experienced leaders, helping shape the future leaders of Himadri. Vihan is a powerful catalyst for innovation, fresh thinking, and leadership development that drives long-term value for our organization. Building on the robust performance and strategic executions we have demonstrated so far, Himadri is accelerating its journey towards long-term financial milestone. Our focus on high-valuated segments and operational excellence has positioned us well ahead of schedule to achieve our ambitious target. We have earlier guided that our ambition was to double our PAT from FY24, which was 411 crores, by FY27. Today, with our progress in just 2 years, we are already nearing this milestone, well ahead of plan. This momentum not only strengthens our belief that FY27 will far exceed our original expectations, but also sets stage for Himadri to establish industry-defining benchmarks and shape the next era of growth. On our strategic roadmap, we are moving steadily towards FY28, guided by a clear ambition to build a diversified and future-ready portfolio anchored in high-value growth. Over the next 3 years, we expect meaningful contributions from our specialty carbon black expansion, the ramp-up of Birla Tyres, the forward integration into specialty chemicals, and the commercialization of our lithium-ion battery material business. Having shared a snapshot of our strong quarterly performance, I would now like to walk you through the detailed progress and exciting developments across our core business segments and strategic initiatives. Let me begin with our core specialty value chain, where we continue to see robust growth and on-track expansion. Our coal tar pitch business remains a trusted supplier to global aluminum and electrode consumers. While we are actively expanding our footprints in liquid pitch exports with newly commissioned terminal at Mangalore Port. In specialty carbon black, the brownfield expansion project is progressing well, set to more than double our capacity to 130,000 metric ton per annum by the end of Q3 FY26, positioning Himadri as the world's largest single-site producer of specialty carbon black. This expansion will take our total carbon black capacity to 250,000 metric ton per annum. With over 60 new grades launched, we are strengthening our leadership and product diversity in this critical segment. In parallel, our new specialty chemical segment is gaining momentum with the upcoming facility of anthraquinone and carbazole production that is expected to be commissioned by Q2 FY27. This forward integration from existing coal tar distillates will not only reduce import dependency but also enhance value addition across the dye, pigment, pharmaceutical and agrochem industries. Moreover, the introduction of Durofresh mothballs with its industry-leading purity of 99.5% represents a new chapter where Himadri's decades of technical expertise translate directly into a consumer-facing product. It's not just a diversification, but it's about capturing greater value within our existing value chain while enhancing our brand presence in a fast-growing retail market. One of the most transformative areas for us is lithium-ion battery material, where we are making strides to establish India's first commercial manufacturing footprints. As India rapidly emerges as a key player in the global clean energy value chain, Himadri is proudly contributing to the Atmanirbhar Bharat vision by investing to become the world's first commercial-scale manufacturer of LFP cathode active material outside China, targeting a phased capacity of 200,000 metric ton per annum. The initial 40,000 metric ton per annum plant is already under development and on track to commence operation by Q3 FY27. Concurrently, we are advancing research across anode technologies, including both natural and synthetic graphite, to build a comprehensive self-reliant battery material portfolio that drives long-term growth, innovation, and energy independence of India. Our partnership with Sicona Battery Technologies in Australia gives us exclusive right to commercialize this advanced silicon carbon anode technology in India, a technology that offers over 20% higher energy density and reduces charging time by nearly 40%. Alongside this, our strategic investment in Sicona, 17.6%, International Battery Company 16.2%, and Himadri Creation 40%, give us access to cutting-edge technologies, R&D capabilities, and a presence across the entire LIB value chain for anode and cathode materials to cell manufacturing. Another important development this quarter has been of Birla Tyres. The business is on course of revival, and we are building a comprehensive product portfolio catering to off-highway tires, commercial vehicles, agri and industrial segments. For the passenger car radial unit designed for EVs and SUVs, the installation of plant and machinery is scheduled to commence within next 12 months. Today, Birla Tyres operates through 29 distributors and over 350 dealers across India and global markets, including Asia, Africa, and Middle East. The new brand identity and digital presence reflect a strong, modern, and consumer-driven direction for this iconic brand. Sustainability means and remains deeply embedded in our strategy, with several important milestones, recognitions, and forward-looking commitments reinforcing our responsible manufacturing philosophy. Sustainability remains at the core of everything we do. This quarter, Himadri achieved the ISCC Plus certification for our Maheshtikri plant, reaffirming our dedication to responsible manufacturing and circular economy principles. We earned a A rating in CDP's Suppliers Engagement Assessment, reflecting strong supplier collaboration on environmental performance. It's also worth highlighting that we have been previously received the prestigious Platinum rating from EcoVadis, which placed us among the top 1% of companies globally for sustainability performance. Our net zero ambition for 2050 is backed by measurable science-based targets across scope 1, 2, and 3 emissions. All our manufacturing sites operate a zero liquid discharge facility, and we utilize in-house clean power for 100% of our electrical energy needs. For Himadri, sustainability is not merely a compliance, it's in the core business philosophy that fuels innovation, drives efficiency, and builds long-term trust with our stakeholders. With our strong balance sheet, robust cash generation, and disciplined capital allocation, Himadri is well positioned to deliver sustainable value to all stakeholders. Before I conclude, I want to thank our team members, partners, and our investors for their continued trust and support. With that, I would like to hand over the proceedings to our CFO, Mr. Kamlesh Agarwal, to walk you through the financial performance in details.
Thank you, Anuragji, and good evening, everyone. Now let me take you through the key financial highlights for the quarter and half year ended 30th September 2025. On a standalone basis, our revenue from operations for Q2FY26 stood at 1,070 crores compared to 1,135 crores in Q2FY25, primarily impacted by the correction in raw material prices, increased focus towards high value added products, and deferment of sales recognition for export shipment to Q3. Driven by our strategic emphasis on value-added offerings and operational efficiency, profitability continued to strengthen even as top line remained soft. EBITDA for the quarter came in at 243 crores, a growth of 21% year-on-year over 201 crores in Q2FY25. PAT stood at 187 crores, reflecting a 39% increase year-on-year compared to 134 crores in the same quarter last year. For the first half year of FY26, revenue stood at 2,171 crores, while EBITDA reached 477 crores, up 23% year-on-year from 389 crores in first half of FY25. Profit after tax for the half year stood at 369 crores, up 43% year-on-year over 258 crores reported in H1 FY25. On a consolidated basis, revenue for Q2 FY26 stood at 1,071 crores versus 1,137 crores of same period last year. EBITDA for Q2 FY26 stood at 238 crores, recording a growth of 17% year-on-year, and PAT at 176 crores with a growth of 30% year-on-year. Our half-yearly revenue stood at 2,189 crores, EBITDA at 473 crores, PAT at 356 crores, reflecting strong performance across all the business segments. We continue to maintain a healthy liquidity position with a comfortable leverage profile. Our debt-to-equity ratio remains low despite ongoing capital expenditure. In summary, Q2 FY26 was another strong quarter with record profitability, robust margins, and a healthy balance sheet, laying the foundation for sustainable growth in the upcoming quarters. That's all from our side. We will now open the lines for question and answer. Thank you.
Pooja, you can start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Sanjay Jain from ICICI Security. Please go ahead.
Yeah, thank you. Good evening, sir.
Good evening.
A couple of questions from my side. First, on the volume growth, if I look at the volume growth for since Q4 24, we are struck between 135 to 140,000. It's because we don't have capacity, or the demand remains soft. What's leading that the volume has been in that range of 135 to 140,000 metric ton for almost 7-8 quarters now?
The volumes are at the same level basically because we are more or less at peak capacity utilizations. And with the new capacity being added in next quarter for specialty carbon black and debottlenecking for the coal tar pitch also happening, then we can see volume growth from Q4 onwards.
Okay, so this basically we are capped by the capacity constraint. You don't see issue on the demand side of it?
No, not at all.
Got it. So how much are we adding or debottlenecking the coal tar pitch distillation capacity?
So our current capacity is 500,000 metric tons. We are going to become 600,000 metric tons.
So how should we think this utilization? Because around 40%.
So this utilization from Q4 it will start. Q3 will have some impact, and Q4, and then from Q1 next year.
Because India
so from Q3 you will start seeing the impact.
But from a demand perspective, aluminium capacity in India is not going up. So 40% of this incremental 1 lakh need demand from the aluminium, and the remaining will go as a raw material into carbon black manufacturing. How should we think the capacity which can come as a sales out of this addition we are doing?
So for coal tar pitch, as we highlighted previously also, we have started export of liquid pitch, and we have recently started Mangalore terminal also. And this month, now November, we are effecting our first shipment from Mangalore terminal. So with this, now we'll be supplying to the global market. The new capacity will basically cater to the global market.
So why can't we export it from our Kolkata port, and why we need to come to Mangalore port?
So we have one unit in Visakhapatnam also.
Correct.
So for that we are using Mangalore port. From Calcutta we are using Haldia port.
Haldia port. Got it. And how much do we have the visibility for this incremental 40,000 metric ton of coal tar pitch demand from the export market?
Yeah, we have very clear visibility.
Got it. Second from the carbon black, and sorry, just to complete that, which geography are we seeing this incremental demand coming in for the coal tar pitch?
Middle East.
Largely Middle East.
Because a lot of smelters are there in Middle East. Significant capacities, and all of them are importing coal tar pitch.
And we are approved there? Or the approval process will start now?
No, we are approved.
We are approved. So just we need to manufacture and supply, that's it.
Right.
Got it. Second, on the carbon black side, if I look at carbon black, we got two pieces, right? One is rubber grade, the other one is the specialty grade. Now, if I look at your peers number globally and India, they are seeing a significant stress in the overall spread, both specialty and the tire grade. While if I look at our number, it shows a very different trajectory here. Though we don't get product-wise, but we have increased in last 1 year the EBITDA per kg from 15 rupees to 17 rupees. Now, how are we able to buck this trend? As in, how are we able to improve the spread while globally and the peers are showing a decline? Anuragji?
Yes. To answer your question, the biggest difference between any other carbon black player and Himadri is that we have always focused on our specialty portfolio, and in commodity also we focus on very niche applications where quality marks a very significant requirement. So in difficult times, this is you know what happens when during testing times, actually the business model of Himadri is put to test, and there is where we prove that the strategy we took over the years is yielding results. Like their market demand and prices are in constraint globally for carbon black, but Himadri has very limited volume of carbon black to sell compared to any of its peers who have significant volume. So they have to compromise on different aspects. But we select our customers on the long-term basis, reliable customers who support us in difficult times, given our loyalty in terms of delivery schedule, pricing clarity in terms of pricing formulas, in terms of quality, consistency, and that is how Himadri differentiates itself from its peers.
No, that I appreciate. We don't have such a low capacity. We are sitting at what, 150,000 metric ton of capacity. It's not.
We are at 180,000.
180,000, correct.
Right.
Now, the scalable capacity of 150,000 metric ton, assuming 80% utilization. So it's not small. We are fairly decent sized. And why would in a commodity anybody pay premium, right? Anybody and everybody is selling the carbon black, correct? We got players like govt, and everybody is reporting stress. Now, I can understand we are smaller than them, but we still have very decent capacity. Is it sustainable? We had some contract which has flow through, or you see this as a sustainable number?
We definitely see this as a sustainable number. And if you look at any other players, their volume of tire is significant compared to Himadri. So in Himadri, the volume of tire is significantly less compared to our peers. That makes the difference.
No, that mix has always been there. I am saying if I look at Oren, who reports both specialty and rubber separately in terms of gross profit per kg, we can see clearly stress in both the segment.
When you compare us with companies in the Western world, they have different cost economics. Their costs, their raw material costs, their overheads are totally different from ours. Their operating cost. And Himadri, over the years, through its operational efficiency, improvement in yield, better waste heat recovery systems, have made so much progress that has always helped us to improve on the margin.
Fair enough, fair enough. Does this backward integration helping us having our own carbon black oil? Is that a differentiator?
Definitely, that's our USP. So when we make product from our own carbon black oil, the quality consistency is very much there, because like we also use petroleum-based oil. But in petroleum-based oil, what happens? Consignment to consignment, there is a variation in the quality of the raw material. In our case, since it's our byproduct, there is absolute consistency in the raw material, which gives a big advantage. And our raw material is very clean material. That adds to the other advantage for specialty carbon black.
Got it, sir, got it. Now, follow up.
And this also, our raw material gives better yield also. So all these factors taken together takes us in a different league altogether.
No, but that difference was there a year back also, right, when we were reporting a 15 rupees a kg, or there is a change in the yield over last 1 year for us?
Yes, there is change, improvement. If you see our quarter-on-quarter commentary also, we have been saying that the yield improvement is there, operational efficiency is there, waste heat recovery systems are improving. So we work on a consistent improvement program on operational efficiencies, which also yield results on quarter-on-quarter basis.
Got it, sir. Got it. Very clear. Very clear. So now, next on the tire side, if I look at Concall minus standalone, which I believe largely will be tire, there the number appears to be a sharply declined. Last quarter we reported a revenue of 18 crore. This quarter it is just 60 lakh. What am I missing here? Or if you can just give us what was the tire sales this quarter and last quarter?
So tire sales this quarter was 26 crores.
Okay.
And last quarter it was 5 crores.
Oh, then what explains this Concall?
So revenue, if you look at it, the revenue has come down in Q2 compared to corresponding quarter last year because of the fall in raw material prices. The average raw material prices at that point of time was around 45,000. Now it's at around 39,500. So because of this,
consolidated revenue minus standalone revenue. I'm not looking at cost. I'm just looking at a revenue line. So our tire is on the subsidiary company, right?
Right.
So if I subtract the Concall minus standalone, that sales largely should reflect the tire company sales.
Tires and one small company in Vati also. There's a small number.
That's a small number, right?
Yeah.
But if I look at Concall minus standalone, that number appears to have sharply declined. Last quarter consolidated revenue minus standalone revenue was 18 crore. This quarter it is only showing 60 lakh, 6 million.
So what happened during this quarter, we have opened a subsidiary overseas and the sales to that has been knocked off since the sales has not affected in the subsidiary. From the subsidiary. In the standalone, that has been considered as a sales. But on a consolidated basis, that has been knocked off. Because of dispatch during the last, cutoff, it has been knocked off.
No, I understood what happened. Thanks for that clarification. So, this quarter we have sold 26 crore worth of material in the tire business.
Right.
Got it. And when we say 29 distributor, if I just want to benchmark the supply chain of the competition, where are we in our region, as in the eastern region, which we started initially, and the central India? What is the penetration right now for us?
So penetration, other than South India and parts of West India, we are present now in pan-India basis. And but these numbers are going to substantially increase quarter on quarter.
When you say this number, you're talking of revenues, right?
No, I'm talking about distributors and dealers.
Dealers, okay. So
particularly dealers, particularly dealers, because our model is to have distributor and below distributor have dealers. Okay. So suppose one dealer is having, say, 10 to 12 dealers now, it will go up to 30 to 40 dealers per distributor. So that will also increase significantly.
So we are saying we right now has 29 dealers.
Distributors.
We can go distributor, then we can easily go up to 900 retailers or the dealers.
Yes, yes. Plus we will have more distributors also.
Got it. So next year, assuming when we will have a full year number in the tire, what is the revenue number we are expecting there?
So this year is the startup. To be very frank, we are not considering this as any revenue. But next year, we'll be ramping up the capacities. So currently, suppose we are running at 10% capacity utilization. Next year, we expect at least 30 to 40% capacity utilization.
Got it. And when should we commission the PCR plant?
So we will start the installation of the machineries. We have the machineries in place. We are getting the machinery tested and checked. After that, we'll start the installation in next 12 months' time. And after that, I can give you a commissioning date.
Got it. So next year, it will all be the bias side only, the PCR.
OTR, OXT.
OTR.
Bias and OTR, OXT both.
Got it. One last question on the battery side of it, sir. Where are we in the LFP supply chain? Have we started the pilot plant, or it is still under the construction phase?
The pilot plant is still in the construction phase. It will start in next quarter.
Okay. And 40,000 metric ton, we said will start in Q3 27.
Right.
Any initial samples which we have sent, and any reviews you can share from the customer side?
Definitely, the reviews have been very good from our pilot scale plant. So we have got very encouraging results, and IBC is a clear example. So IBC is coming out with a cell Prabal 2000 with LFP cathode material, for which we sent them sample and they tested the material, and they were so pleased to see the quality of the material that we had detailed discussion, interaction, and then we collaborated also. So IBC has already launched Prabal 1000, which is a NMC based cathode material cell. Now they will be launching Prabal 2000, which will be LFP based, in which Himadri's LFP will be used.
Got it. One last question on the anode side. We first time spoke about anode, natural and synthetic, and also silicon that we want to integrate there. We haven't announced any capex. So where are we in that anode development, and when can we expect any capex announcement on anode side?
So we have done a lot of investment in terms of research and development in technology for all the three types of anodes. We have made significant investment in this, and we are very happy to say that the results have been very encouraging. So once we are in a position to commercialize the technology, which will take another few quarters, then we will announce the capex program.
Got it. Now that's very clear. Thanks, Anurag ji, for patiently answering all those questions, and best of luck for the coming quarters.
Thank you.
Thank you. The next question is from the line of Yash Gupta from Arshit Kotecha Family Office.
Yeah, hello. Good evening, everyone.
Go ahead, sir.
Good evening.
Sir, can you throw some light on the earlier participant question on the tire business? which segment we are focusing on in the tire, particularly once you say the South India and the Central India, and how big is the opportunity in next 2 to 3 years in terms of EBITDA? It could be like 10 to 20 crores of quarterly EBITDA or like 50 crores of quarterly EBITDA.
See, tire is going. Our focus on tire will be on OHT and OTR segment, along with that EV segment and passenger car radial segment. So this will be the focus area. We are starting with bias and will continue with some capacity of bias in our portfolio. So there is a huge potential in this tire market. And in next 3 to 4 years, I see huge opportunity for Himadri in terms of top line and bottom line both. And the numbers which you told will be significantly higher than what you told.
Okay. So have we done any tie-up with any EV company? Well, I think EV we have not launched as of now.
No. So what happened? So we are in the process, like I told, in next 12 months, we will start the installation of our PCR plant. And after that, we'll do commissioning. Post that, we will have the tie-up. Now it is in development stage.
And we will look for the OEMs, not for the retail.
Definitely, we will look for retail and OEM both. In retail, margins are much better than OEMs.
Okay. And sir, second question is on the EBITDA margin. In the last 6-7 quarters, we look at EBITDA margin is going up despite the volume or almost at the same level. So which raw material prices have gone down in last 4-5 quarters, and what's the reason for the decline? And whether we expect this decline to be sustainable?
See, the margins has not improved because of decline in the price of raw material. So in our case, any increase or decrease in the price of raw material is passed on to the customers. So no improvement has taken place because of any movement of fluctuation in the price of raw material. The margins what we have achieved are clearly sustainable margins, which has been which the company has been able to achieve through lot of operational efficiency project we are driving in our company, starting from yield improvement, energy saving, waste heat recovery system, and host of other. We have different initiatives which we take, and basis that we have been able to improve on our margins. Plus, in addition to that, the company is moving towards high value-added products. So this transformation from normal products to high value-added products is giving higher margins with the same volumes.
So we are expecting this margin to be sustainable.
Definitely.
In improving.
These are sustainable margins.
Okay. Sir, last question on this specialty carbon black forward integration part. Q3 FY26 is intact. We are not. We are on timeline.
Yes. I've already announced in my commentary that end of Q3 FY26 we will see the commencement of our specialty facility.
So maybe for Q4 there will be some impact, but moreover the full impact will come in the next year only.
Yes, Q4 you will see some impact, and Q1 you will see the full impact.
Okay, sure. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Riya Jain from SDA Finance. Please go ahead.
Thank you for the opportunity. So my first question is, given the revenue decline and the inventory receivables movement, what is the current working capital cycle and how do you see it evolving in the next 2-3 quarters?
See, current working capital is 31% of the top line, and we expect this to remain in the same levels.
For the next 3 quarters, right?
Yeah.
Got it. Also, looking at the short-term borrowings, we observe an increase of 300 crores to 800 crores on a consolidated basis. So could you please help us understand the rationale behind this rise and what is the target debt to equity ratio or leverage level the company is comfortable maintaining?
So actually, these are commercial papers we have issued against which we have done deposits with bank. So there is no leveraging we are doing. All the future expansion of the company will be funded through internal accrual only. So currently, if you look at net debt, it is only 113 crores.
Got it, sir.
And we expect to be cash positive in March in terms of our debt.
Okay, so you'll be net debt positive in March?
Yes, definitely.
Got it. Also, the company achieved ISCC Plus certification and emphasized sustainability credentials. So congratulations for that firstly. And could you elaborate on how sustainability initiatives are translating into business advantage like pricing premium, market access, cost savings, and so on?
Definitely. See, sustainability has been our motto since last more than 15 years. When people were not that much focusing on ESG practices. So IFC Washington, World Bank invested in Himadri in 2009, and after a detailed diligence of 14 months, they invested in terms of environmental practices. And we had private equities in our company for last 15 years. So who are no longer there, but those corporate governance best practices, sustainability practices are embedded in the core of the company now. We have been following these practices over last 14 to 15 years, and the result of this is what you see like over this platinum rating. It's a very prestigious ranking, which only 1% of the manufacturing companies globally have. So Himadri has a unique positioning among those 1%. Now, regarding when we work so much on sustainability in terms of best environmental practices, in terms of governance practices, in terms of socio goals. So when we interact with our customers, these customers also want these practices to be very strong in their suppliers, because on their scope 2 reduction, they have also highlighted about these things, so that they get an advantage dealing with Himadri. So following these practices, we get a pricing premium compared to our peers. That is also one advantage Himadri is having.
Right, sir. Thank you so much for taking my questions.
Thank you.
Thank you. The next question is from the line of Viraj from Asit Koticha Family Office. Please go ahead, sir.
Hi, good evening. Am I audible?
Yes, please.
Yes. My first question was on the Durafresh brand that we have launched. So how are we navigating the naphthalene ball B2C market with our brand Durafresh? What is our strategy there to grow and gain market share from the existing players? And how big is the market, and how much revenue do we expect to make from this market, from this business segment in FY27?
See, we have been selling to this market, not directly, but to others. Like we have been suppliers to Wellet, which is the largest mothball player in US for years. 80% of their requirement was met by Himadri. Like that with other players. So now we did a forward integration by introducing our own mothball. So the quality of the product has been very well appreciated by the market. We started with a very small capacity to test the market, and the results have been very encouraging. So now we are setting up a larger capacity, for which in next 3 to 4 months equipment will be installed, and then we will see the ramping up in production and sales of Durafresh mothballs. So next year we expect, in terms of revenue, you will not find significant change, but in terms of profitability, because whatever addition will be there, that will directly go to the bottom line.
Okay, got it. And my second question was, we still expect the battery chemical business to contribute 2,500 crores to 2,700 crores in revenues in FY28. And like, have we signed any contract with a OEM or a bigger player which would help us to achieve this revenue?
So, what happened? We have at 100% capacity utilization, we will achieve 2,500 to 2,700 crores top line. But whether it will be 28 or 29, that we have not till made any announcements or commitment on that.
Okay, so just wanted to understand, is the product being accepted, or how is the quality of product, or some feedback?
The feedback has been very encouraging, and that is the reason we are going ahead with the capex program.
Okay, got it. Those were my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Darshan Shah from MNS Associates. Please go ahead, sir.
Hello, am I audible?
Yes, please.
Hi. Sir, I have a couple of questions more on the macro front specific to the industry and demand. First was, are you witnessing any demand recovery in Europe and East Asia after, there's been recent history of this slowdown in demand. So how is now the demand shaping up there?
See, for us, demand has been strong only. Reason being that we have our volumes of carbon black are fully sold. So we don't see any significant positivity or negativity in the demand side earlier also and even today. For us, the demand remains strong only as before.
Okay. Got it, sir. And so, sir, if the natural extension to the question is, if the demand remains strong, how do you see the competitive intensity in coal tar pitch and carbon black with new entrants coming in, possibility of new supply and pricing pressures?
Coal tar pitch, there is no new entrants who are coming in. Because coal tar pitch, to establish a product also, it takes 2 years' time. So coal tar pitch, I don't see any new players coming in. And if someone comes also, then it will take 2 years first to establish their quality. For carbon black, the existing players are only expanding their capacity. I don't see any new player coming in.
Got it, sir. So you don't see, you see that there's still enough comfortable demand, no problems of, larger supply, pricing pressures that you will have to deal with in the market in terms of your clients and customers?
No, nothing like that.
Okay, sir. And sir, the competitiveness of Indian carbon specialties versus Chinese and Korean producers in the export market. So any thoughts on our competitiveness versus the other peers, Chinese and Korean peers?
China basically produce carbon black using coal tar oil. And the cost of coal tar oil is higher in China because the cost of coal tar is higher in China compared to India. So we don't see any competition from China as such in the international market.
Right, sir. And Korea?
Koreans are not that focused on specialty. They are more on the commodity side.
Got it, sir. Thank you. And so finally, do you expect double-digit growth resumption in FY27 once capacity addition starts contributing?
Yes. Definitely we see double-digit growth.
Great. That was very helpful, sir. Thank you.
Thank you. The next question is from the line of Preeti from SK Associates. Please go ahead, ma'am.
Yeah, thank you so much for the opportunity. I would like to know that the revenue for Q2 declined to 1,071 crores despite strong margins and profit growth. So among your major product segments like coal tar pitch, carbon black, advanced materials, which saw the largest pressure, and is this temporary or structural?
No, there was no pressure. In fact, if you see the decline, as we clearly mentioned, it was basically because of two factors. Number one, corresponding quarter last year, the raw material prices, average raw material price was 13% higher than current prices. 13 to 15%. So when the prices came down, the realization also came down. That resulted in lower turnover. In addition to that, there was a significant export volume which was not considered in this quarter because of cut-off date. It went to the next quarter. So the volume and the turnover went to next quarter. That was the result. It's nothing to do with any pressure or anything.
Understood. And a portion of the revenue was also impacted due to the export orders that were executed during the quarter but not recognized in Q3.
Yeah, that's what I said.
But will be recognized in Q3. Right. So could you please...
That will be recognized in Q3. Yeah,
okay.
Right.
Given your presence in the 50-plus countries, could you share insight on the overseas demand trends observed in Q2 and highlight the key geographies you expect to drive growth in the second half of the year?
See, the momentum has been strong, and looking forward also we feel that the demand is going to remain strong only. We are supplying to various geographies, like 54 countries globally we are supplying our materials.
Understood. And the crude oil and coal tar derivatives remaining volatile, how effective is your pricing pass-through mechanism in both domestic and export markets?
100%. Whether price goes up or down, what difference it will make is only in terms of percentage of margin and in terms of top line, not in terms of absolute margin.
Understood. Okay. All right. Thank you so much, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Santosh Kesri from SK Huff. Please go ahead, sir.
Hello, sir. Am I audible?
Yes, please continue.
Okay. Just one query, and that is about the impact of US tariff on our export. So is that impacting us too much? Who is bearing the duty? Is it the buyer or we are bearing the duty? How is it happening? If you can also give a detail of demand scenario there.
See, this is already reflected in our Q2 results. You can see there is no impact.
Yeah, that's what I'm surprised that other players have really, their exports have plateaued and their profits are not as much. But in our case, it's not happening. So is it the buyers, are the buyers bearing the duty? How is it happening?
Because of our non-dependence on a single geography. So if there is a challenge, we move our product to some other geography. And the material we supply to the challenge geography also, that is also very high quality where the impact is not, where the customers want the material. So that's why we are not impacted.
Okay, so we are saying that our demand is so huge and we have so much diversity in supplies that we can supply to any geography we can choose.
Yes. And the volumes are low.
Just needed your confirmation, sir.
Thank you.
Thank you. The next question is from the line of Dheeraj Shah from RK Investments. Please go ahead, sir.
Hello.
Yes.
Yeah. So thank you for the opportunity, and I have a couple of questions. So while the revenue has fallen, margins have improved significantly, and PAT margins are also up strongly. Could you break down how much of the margin improvement is due to the product mix shift versus the cost control or raw material tailwinds?
See, because of the raw material prices, there is no impact because that is passed on to the customers, any increase or decrease. But yes, there's been significant improvement in terms of operational efficiency, yield improvement, and energy efficiency, waste heat, gas treatment and recoveries, which has led to improvement. And in addition to that, what you told, high value-added products. So high value-added products contributed around 65 to 70%, and 30% was on account of operational efficiency.
Understood, sir. Also, secondly, given the stagnation in revenue but improvement in margin, what is your guidance for FY26 growth, perhaps for volume or revenue, and any margin targets that maybe we could look up to?
2 quarters is already there. So you can see we are already at a PAT of 369 crores. A year back, we projected to double our profitability from FY24 to FY27, from 411 crore to 800 plus crores in next 3 years. But if you look at the actual performance, we are already on that track in 2 years. So we are going to deliver what we promised in 3 years and around that in 2 years. And third year will be even better.
Understood, sir. Understood. And lastly, given the emerging EV ecosystem in India, where do you see Himadri's strategic fit as a raw material? Would it be as a raw material supplier or as an integrated advanced materials player?
Definitely, Himadri is going to play a key role in the EV and ESS storage, entire technology ecosystem which is going to play out in India. Because Himadri is going to be the key supplier for raw material components for making lithium-ion batteries. And it is going to play a predominant role in this field in the years to come. We have been investing in this for last over 12-13 years. And it's not that today everyone is talking about lithium-ion that Himadri has started, discussing and talking about lithium-ion batteries. You go back to our 10-12 years back report also, that time also we have been talking. And now the fruits of all those investments will yield results.
Understood, sir. Understood. Thank you very much for the opportunity and all the best for the quarter ahead. Thank you.
Thanks.
Thank you. As there are no further questions from the participants, this concludes this conference. On behalf of Himadri Speciality Chemical Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.